Okay, guys, hello, welcome to Saturday webinar. Let's begin. So, wait, oh, hello, somebody say hello. Okay, let's begin. Okay, so Friday we do have a little bit of dip buying coming in lah. Okay, so you can see S&P 500, Nasdaq initially dropped a lot, then towards the end of the session it kind of recovered back up, but not fully lah. Okay, not fully, but a bit, a bit. It is still at the lower end of Thursday candle lah. Okay, but you can see that from a technical perspective, the level that it is recovering from. Okay, similarly for S&P 500 also. The only odd one out is actually IWM, which is Russell 2000. We do have a recovery towards the positive end, meaning to say by the end of the session we close green, but it actually closed below the tariff big red candle. Okay, this is the tariff news, the big red candle here, it is still below there. Okay, whereas if you look at S&P, the tariff candle is here. If you look at Nasdaq, the tariff candle is here. So Russell 2000 is a little bit underperforming on the end. Okay, at the same time, right, we also have the use kind of recovering back very aggressively. Initially, it was down by quite a bit, but towards the after like um 10 p.m. like that, it kind of recover all the way back up. Now we are the 10-year yield is now back to 4.148 lah. So there are a few things that is actually contributing to this. Firstly, one of the news is that the shutdown will be over. And with the shutdown over, right, there are likely a lot of economic news coming in, okay? And apparently, there's a lot of changes and revision in the job data also, which doesn't seems to be like how do I put it the data seems to be going in the inflationary direction now, okay, which is why the yields are actually going up. And in fact, on Friday, there were a few Federal Reserve member actually coming out to speak, and one of the Federal Reserve member mentioned something like it's very hard to justify a December rate cut, lah. Okay, so at the back of that comment, we have the yield kind of rallying, and at the same time, if you look at the rate cut expectation, right, there is actually a 55% probability that there's no rate cut in December. Initially there was like 99% rate cut in December, but now after that comment, right, it kind of switched down to 55%. Okay. So I think from data perspective, right, although we don't really have any data coming in yet, the market is kind of like expecting or pricing in inflationary data, okay, meaning to say the job market is going to be slightly tight, blah blah blah, whatever lah. Okay, so we do have the tech sector kind of rebounding back up also, and if you look across majority of the stocks, right, you can identify a few trends. Firstly, all the consumer discretionary stocks are down. Okay, so if you look at Starbucks, Abercrombie and Fitch, Dutch Bro, Shark Ninja, Toast, all these consumer stocks are down, but the technology stocks are actually recovering. Like for example, Nvidia recovered. Riot initially from a very red recover into a slightly green. Salesforce also somewhat recovered, and all the other tech stocks, the one that we mentioned previously, like APLD. What's APLD? Are there tech stocks like APLD, CoreWeave? CoreWeave is still red, but it did recover a bit, lah. Okay. AAOI, most of the tech stock kind of recover. And the reason is very simple. Tech stock, AI stock are actually inflation proof in a sense, because they are going to spend all the money regardless of what's the current inflation condition is right now, lah. Okay. So normally the consumer discretionary stocks are a little bit more sensitive to sort of inflation lah. So that's the reason why you are seeing this kind of price movement here lah. Okay, so that is the market. Next week we have Nvidia earning coming into play, and we have Nvidia position is coming in after the market. So do watch out for that lah. Okay. So let's go on to the portfolio. So I have made some trades this week. The major one is definitely chemo. Make I made the decision to take the big loss, the big loss at $12.80. So that's the $52,000 loss. And I since I'm getting rid of the position itself, right? I'm also getting rid of the protective collar, okay, which are the what do you call that? The cover call and the put option lah. So there's a little bit of loss from that position also lah. Okay. So I don't really want to hold on to that position anymore. I need the capital, or not that I need the capital, but I feel that the capital, the margin that is being tied up, is actually better spent elsewhere lah. Okay. So of course, this is definitely not the ideal situation, and this is also one example where you cannot borrow my conviction. If you are blindly convicted simply because I am convicted, then that's something wrong really lah. Okay. And the reason why I was risking much more than necessary for this trade is also because, as I mentioned earlier, right, I did have quite a big chunk of profit coming in from axometry. And if you previously did not have that kind of profit coming in from axometry, right, and then you end up risking very big simply because I'm risking very big, then you are going to be in a worse off position than me. And more importantly, axometry somewhat saved the portfolio again, because during the earning, axometry went up 28%. So even though you can see my stock position went up, my stock position is in a profit of 33,000, right? In fact, majority of the profit got eaten up by the cover call lah. But at the same time, I did have another small position here, which kind of give me like additional $3,000. It's not really a lot, but I mean it's still profit nonetheless lah. Okay. So you can see here there's $14,000 profit from axometry net. 14,000 here, you can see at the bottom, plus another $3,000 here. So if I select all this, right, my net profit is about $18,000. Definitely not sufficient enough to offset the loss here, but definitely buffered the loss lah. Okay. So I got buffered by axometry twice. One before I entered chemo, secondly after I entered chemo. So now if you actually miss out axometry before and after chemo, right, then you're in a worse off position than me if you actually risk big on chemo and take the big loss lah. Okay. So it's very important that you are not copy trading blindly and ensure that you do your risk management properly also. So anyway, this the of course the biggest loss thus far in my trading career in in one single stock. And that one trade alone pull down my total portfolio by 12.9%. Okay, but of course, axometry kind of save a bit. And aside from that, we also exited Flute. So congrats to all the people who managed to get Flute. Overall, my profit is about $5,000. So this trade, I only risk $900 like that, but I was able to get $5,000. Okay, so if you manage to get this, congrats. And along with that, I've also exited Riot, because Riot, when we entered, it was like right here, and our strike price was actually $15. Sorry, our strike price was actually $15. And after the entry, right, the stock was down quite heavily, okay, 24%. So I decided to exit it, and in the future I will re-enter again. So there was $2,000 profit, which I'm quite happy. Okay, so quite a number of trades were exited. Um let's go on to open position. So open position, right? I was trying to do my data entry, but as I was doing halfway, I cannot. The interactive broker actually kind of like got connection error lah, and I wasn't able to go in, so that I could not enter data for some of the positions lah. Okay, but I'm just gonna leave it like that. So you can see with axometry gone, right, the portfolio is like in a very comfortable position now. Okay, so I'm still holding on to Shark Ninja, Starbucks, Nvidia, Salesforce, Dutch Bro, Toast, TLT, IWM, and Lulu and VIX lah. Okay, So I'm not going to go through all this one by one, but rather I'll kind of let you see the expiration risk lah. Okay, I think this is much more useful for you based on all the structures that we have, based on all the trades that we are taking. So you can see in November, November expiration is next week lah. Okay, so for November expiration, we don't really have a lot of risk. We don't have anything else expiring, any long leg expiring in November lah. Okay, there are only two credit position expiring, and highly likely I'm gonna get the toast credit. Whether or not I will get the Nvidia credit is dependent on Nvidia's earnings that is coming up on 19th of November lah. Okay, which is actually next Wednesday after market hour. So if next Wednesday Nvidia goes into our direction, then this long leg, the December long leg will be in profit, but highly likely the November leg will be in a loss lah. Okay, but I'm fine with eating the loss on the November short leg, because if your short leg is eating a loss, it means that your long leg is getting a lot of profit lah. Excuse me. So with the recent recovery in Nvidia also, which is quite important, which is precisely why we enter Nvidia in the first place, because we do want some kind of long position in long position that are long bullish position that are expiring in December lah. Okay, and you can see that aside from Nvidia, right, there's no other long leg expiring in December lah. Okay, there is IWM, but IWM is actually a put option. So it's only Nvidia there, and we cannot leave December without any proper bullish position lah. Okay, that's the reason why Nvidia was there in the first place, and it is definitely sort of fulfilling its roles here lah. And you can see currently it's sitting at 190. So the long leg is 195. The long leg strike is 195, meaning to say it only need to go up like a bit, like about 2.5%, and the long leg is in the money already. But the short leg is at strike 200 lah. Okay, short leg is at strike 200, somewhere around here. Meaning to say going up, it is somewhere around 5% up lah. Okay, so now Nvidia definitely can move more than 5% on earning itself, but the fact that we have our short leg is at a higher strike means that even if the market kind of like shoot up, right, highly likely that we will be getting more profit. We'll be getting more profit overall, net profit, both short leg and long leg combined. Um, Compared to, let's say, our short leg strike is lower lah. Okay, and of course we actually have more contracts on the long leg also. I have 400 contracts, or four contracts. Okay, four contracts on the long leg, two contracts on the short leg. So we are definitely quite alright for Nvidia's earning. And even if Nvidia's kind of go down, it's fine also. We can actually take the credit here, and we just leave this running for December lah. And eventually, if December recover, then all the better lah. So the fact that the long leg is at 195, right, is actually also advantageous for us, because let's say if Monday, Tuesday it kind of go up, and then Wednesday it drop, then the long leg in December, it doesn't need to climb so much to recover back up. Okay. If let's say my long leg is somewhere like 200 or 205, right, it might be harder to climb back up in December. So depending on what happened on earnings, the overall idea is that we do want to hold Nvidia into December. Okay. Unless Nvidia gap up very big, and then the whole position is in a very strong profit, then we will definitely take profit. Okay. But anything other than that, if Nvidia is flat or if Nvidia's go down a bit, right, then we'll be holding this position into November. Okay. So that's basically about it. And then in December, mostly credit position, all the short legs. So there are only two long legs. One is IWM, one is Nvidia, and the other one is TLT. Okay. I didn't really include TLT here because TLT cannot, you cannot say bullish or bearish, because it's kind of like independent from the market. Okay. But definitely TLT is still there also. So anyway, right, you can see in December I have IWM and Nvidia. Now the good news is that IWM is definitely in the money. It's currently sitting at 237, so the strike price is at 240. So it's in quite a good money. In fact, if I feel that I want to get rid of IWM because market is actually recovering, if I foresee Monday, Tuesday to recover some more, right, then I can just exit IWM with some kind of profit. Then my December is basically nothing much really lah. Okay, I'm just counting on Nvidia. And then we go into January. So you can see January, there's not a lot of short leg. There's only one Dutch bro short leg there. And the reason is because January is still very far away and I don't want to do any option structure that are all the way into February or March next year lah. Okay, so I only have one trade, which is Dutch bro March, the long leg in March, the short leg in January, and the only reason why I'm doing that is because I deliberately want to stagger the position out a bit lah. Okay, but aside from that, there's no other reason lah. So probably we will wait for all the December trades to kind of work themselves out, and depending on how December ends, right, then we will start adding trades into January, February, and March lah. Okay, but so far, December seems to be all right from risk perspective, and January is a little bit overloaded on the long leg, but of course, we will settle January once December is coming to an end. Okay, we can definitely add more position, we can add more short leg, we can start doing February, January calendar, those kind of stuff. Okay, but so far, I think the portfolio is fine the way it is right now. So with that said, right, I don't really want to add additional trade into December unless it is speculative earning play. But aside from that, most likely I'll be looking into January or February expiration really lah. Okay, so now let's take a look at some of the stuff that we can trade in the upcoming week. Okay, so now I want to put up a very general disclaimer. As you can see here, right, a lot of the index kind of recover back up. US, Nasdaq, S&P, Russell 2000, and a lot of the stocks are also facing similar kind of candles. Okay, you can see Microsoft open very low, gap up, Nvidia open very low, gap up, and Tesla same. So all the candles are somewhat similar. Okay, so now don't be that guy and start putting in a bunch of long position, like everything long, then suddenly your entire portfolio is long. So in fact, if you end up putting a lot of long position in things like Microsoft, Nvidia, Tesla, right, then you are what you are basically doing is you are um piling in on the same kind of trades. Okay, there's no diversification. Let's say one trade you risk $2,000 and then you risk $6,000 on Microsoft, Nvidia, and Tesla. Highly likely that they are all going to move in the same direction. Okay, if next week market recover, then all three of them going to move up, which will be good for you. But let's say if all the market doesn't do well next week, right? Then all three of them move down, right? Then you may end up losing that $6,000. Okay, so just because you are entering three different positions based on whatever technical candle that you are seeing here, it doesn't mean that you are diversifying. Highly likely that you are either going to win all three or lose all three, which is basically the same as putting in a one oversized big long position. Okay, so don't do that kind of thing. In fact, I would think that is good to take profit on your short position, but I don't think it's good to add additional long position. Okay, so you can see some of the profit that I've taken. They are Flute, which is a short, Riot, which is a short, and if possible, I may want to take IWM profit next week also if needed. And you can see that with all this short position gone from the portfolio, right? The portfolio might be currently very long bias lah. Okay, quite long bias, and you can see here is definitely long bias lah. Okay, so in January I have two longs, two bullish position, Toast and Shark Ninja, and then in March I have one Dutch Pro, and then in December I have Nvidia lah. Okay, on the short side I have Salesforce, Starbucks, and that's basically about it. And currently I have IWM, which is in the money lah. Okay, but if I take IWM off, right, then highly likely my long is more than my shorts, which can put the portfolio in a little bit imbalance if suddenly market continue to crash lah. Okay, so don't take the Friday movement as a sustained recovery. Highly likely it may go up a bit, but after that it will retrace back down. Okay, so maybe for December it may be a little bit bullish, then sideways a bit, and then January it may go back down. That's perfectly possible. So don't get yourself overexposed lah. Okay, so now some of the stocks that I will be looking at. Firstly, as you can see, I have Toast, Dutch Bro, and Shark Ninja, which kind of make the portfolio a little bit overloaded on the consumer discretionary stocks. And thankfully for Nvidia, which is in the tech sector, right, it kind of like have a little green on Friday lah, even though the rest of the longs are red lah. Okay, but of course we also have Starbucks, which is red, so it kind of buffer a bit. So you can see how the diversification and management of the portfolio keep the portfolio from falling apart lah. Okay, so with that said, going into the future, I will definitely be looking at a few tech AI position to long. I will not be looking at other long on consumer discretionary already lah. And at the same time, right, maybe I will be looking at a few consumer discretionary to short. And one of the stocks that I have recently sort of discovered is Sunrun. So this is something that I mentioned in on Friday. So Sunrun is basically a solar panel company that installs solar panel for residents lah. Okay, so these are consumers lah. So it's not like industrial solar panel, but it is actually meant for single home, multi-family home products lah. At the same time, we will also have Starbucks ready, and maybe I may also consider ANF also. ANF is currently going into like a X growth mode. They actually had a very strong rally previously because of some management change, but it definitely overrun, and I think there's a lot more downside coming in also. Okay, so definitely looking at a few consumer discretionary shorts, and at the same time, I'm looking for tag long also. So tag long, I'm still looking around. Currently, we have Nvidia buffering, so I do have some time. Probably I will spend the next Monday, Tuesday looking for one tag long. Okay, and then after that, once Nvidia earning come out, we see how lah. So now Nvidia's earning also one positive things that we have is due to the latest discussion regarding tariff with China, right? It seems like there's some agreement in allowing China to purchase some of the better Nvidia chips. So maybe there's some sales growth or expected sales growth coming in for Nvidia lah. Okay, so so far this rally that you see here is actually without any sales to China, or the sales is very limited lah. Okay, and when that sales to China is open up, right, without any very heavy tariff, or if there's some specific tariff exclusion, right, then we can see the growth going a lot higher lah. Okay, so this is something that I would think considered positive for positive catalyst for Nvidia's earning. But aside from that, I'm also looking at other tech AI related stock lah. Okay, you definitely do want to be a part of it. You cannot not have any long exposure to tech. If you worry about AI bubble, short something, but you still need that long position lah. Okay, you do not want to be left out in the cold. I'm also looking at Symbiotic, but is a bit on the earning is coming up next week. Not next week. Is it next week? 24th. So next week lah. Okay. I'm actually contemplating playing long position on this. Symbiotic is very similar to Axometry, where they are in the industrial space, but they are trying to implement AI in the industrial space lah. Okay, and they are actually implementing it very well. So it's something that I'm looking at also, but haven't really decided on it yet. It's not like a very strong AI play, but it is more of like the end user lah. Okay, they are the end user of AI, but they are actually in the industrial space. So the amount of AI exposure or tech sector exposure is not that big lah, not that big. But something to consider. Aside from that, I am also actually looking at aluminum sector. In fact, Alcoa and Century Aluminum. So Century Aluminum here, you can see the earning was actually not bad. The stock kind of rallied like crazy in the earnings, and then after that there was a very big sell down that came in, and this sell down was caused by Glencore. You can see Glencore actually sell quite a large number of Century Aluminum share. They are exiting lah, okay, which is fine, which is fine. I mean, if you are a investor, if you are a long time shareholder of a company and you are just exiting your position to cash in the money, right? That doesn't change anything, okay? That doesn't actually change anything. Similarly, we have SoftBank exiting Nvidia also, which probably caused a little bit of a down move, but it doesn't change anything, okay? So now, the thing about aluminum and Alcoa and Century Aluminum, right, is basically because one of the raw material that is needed for all these data center expansion is steel and aluminum, and there is actually a short supply in terms of the amount of available aluminum refining facilities lah. Okay, so I'm actually looking at CNX Century Aluminum, which is one of the stock that we actually shortlisted in batch 9 earlier this year for our trading course. We shortlisted Alcoa and Century Aluminum, but I actually went for Alcoa, which also recovered quite big lah. Okay, but I think this time I'm trying to give Century Aluminum a go, and I do think that the drop from Glencore exiting the position actually give us a nice level for entry also lah. Okay, but of course, some homework still need to be done also. So the other one that I'm looking at is sorry what is it? Yeah, sorry. The other one that I'm actually looking at is Credo. Credo, we have played Credo for quite a number of times, and the demand is still there for Credo product, and I think there's a good chance that it can go up a lot higher, so we can definitely get back into Credo also. So it's on the watch list lah. Okay, we see how Nvidia perform, and then after that we decide. And on the short side, Riot, I'll probably want to re-enter Riot again. It has declined significantly already lah. Okay, it actually declined significantly already. So after some time, maybe let it recover a bit, and then we will get back into Riot again sometime in the future lah. And housing sector currently in some kind of a danger. So I also do want to enter housing sector also. With the rates kind of suddenly going up, right? You can see some of the housing sectors actually facing red color lah. Okay, so maybe Builder First Source or maybe Toll Brother, Pool Corporation already like drop until don't know where, but maybe Toll Brother or Builder First Source or KB Home. I think KB Home is quite okay also. But the thing with KB Home is that the option is not really very liquid, so it's very hard to play the option. Maybe Toll Brother might be better, so that's one short leg that I'm looking at. Also, short short position, bearish position that I'm looking at also. Okay, so now for TLT, TLT is actually going, as I mentioned, right? TLT is going up mainly because of renewed inflationary issues lah, and also because of Federal Reserve member making that comment about whether or not a December rate cut is possible or not. Now they are leaning to the side of not possible, and that's why the market is kind of pricing in a potential no cuts in December. But if the rate cut do come in for whatever reason, then there can actually be a very sharp recovery coming into TLT lah. Okay, so if you're going to play TLT, if you're going to long TLT, right, it is with the expectation that a rate cut will happen in December. So if we look at the calendar for December FOMC, it's actually very, very early, very, very early into the month on 9th and 10th. So from now until 9th and 10th, right, I don't know how much data can come in. And if we do get some data with regards to the job market, with regards to inflation, then maybe from there we can determine whether or not will there be any rate cut in December lah. Okay, so because the government shut down and now they are coming back already, they are coming back online already, right? I'm not really sure if they are gonna stick to the calendar lah, the usual calendar for their data release lah. Actually, I do have the updated calendar, but I need to go and take a look at it also lah. Okay. And one of the things that I'm looking at also is actually gold, but I'm kind of looking at on the short side, looking to short gold. And the reason is very simple. Is basically a contrarian trade, okay? So it's good to have what I call the pain trade. Pain trade. Pain trade is when a stock is overcrowded or one play is overcrowded. In this case, the gold play is very, very overcrowded. There's a lot of long in gold, and when the trade goes in the opposite direction, be it whatever economic data release or what, right? If it suddenly goes in the opposite direction, what usually happens is that all those speculators, all the people who blindly follow the trend, all the technical traders, a huge majority of the long player in gold, right? They will start to get out of the trade, and that can actually cause the stock to go down more aggressively than what it normally should have lah. So normally in this kind of trade, right, what you will try to do is you will try to get um very aggressive trade, meaning to say you will buy options that is quite out of the money, and then you'll probably play some kind of vertical or calendar, and if it goes in your direction, right, you will try to aim for very high risk reward ratio like 10 times or 12 times, something like float like that, okay? Something like float like that, and float actually goes into our direction. Our expectation was 14 times. If you look back at float, uh our target was 190, and if it goes to 190, wow, very close, yeah. Very close. Yeah. Wow, it fell as much as 193 yesterday. If it goes to 190, right, then our profit is actually 14 times. But even if it doesn't go to 190, if it end up somewhere close, right, you still get a very, very respectable 7 times. Okay, so that's something that you can go for gold. And gold is actually a very good hedge against your TLT long also. If let's say there's no rate cut, and suddenly the yield start to spike up, right? That may actually cause gold to decline even more. So if you're holding on to TLT long, then gold is actually a good opposing side of the trade for hedging. Okay, so that's something that I'm looking at also. So quite a lot of stuff going into December. Since we will probably know what our December risk would be like next week, whether or not Nvidia is gonna profit or we're gonna take the loss there, we can definitely add a few more trade into December, okay? And at the same time, IWM is in the money, in the profit. I think this one not updated lah. Okay, currently I cannot update, but definitely more profit right now because of the decline. I can actually get rid of IWM. So if Nvidia is out, IWM is out, then I don't really have any risk on December already, except from TLT. So with that, I can add in a December short position on gold, and then we see how it goes from there. And just nice, the TLT and gold are kind of hedging against one another. Okay, that will make a December a very, very profitable month, along with all the credit that we are receiving from all the short legs. Okay, so that is basically how I am planning out my trades. And you can see there's a lot of thought process, a lot of planning, a lot of foresight involved. If you are somebody who is like trying to alter my structures, like for example, wow, Zol put December expiration, don't want lah, I put November or I put January. If you are trying to make this kind of alteration, right, make sure you know what you are doing and make sure it fits into your portfolio, because every decision I make is being made with my portfolio in mind. My portfolio, not your portfolio. Okay? So make sure you look at the structure and then you kind of make sure that it suits to your portfolio need also. And if your portfolio have a bunch of stock position and option position, then that's something that you need to manage yourself lah. I definitely cannot help you with that. Okay. So whatever you do, make sure you are thinking a bit, bare minimum. Think through a bit before you put on your positions lah. Okay, guys. So that is end of our today's session. Just want to emphasize again, don't think of Friday candle as a sustained recovery bull candle. We are going up, Santa rally. Be a little bit more careful. I don't think it's gonna end up in extremely bullish recovery. At most, it will go up a bit and then stagnate a bit, but there are still weakness within the macroeconomic data lah. Okay, so make sure you have long and shorts at the same time together. Make sure you know what is expiring in December. You know what are your exposure in December, those kind of stuff lah. Okay, guys. Have a good weekend. Have a great Sunday. I will see you guys next week, and let's hope for Nvidia's rally lah. Okay. Bye bye. Fintech ah. Fintech, you have to give me specific ah. Not really a great fan of fintech. I actually have one one of our graduate giving me a firm, and I do quite like a firm. And you can see a firm definitely was damaged on Thursday and Friday lah. Okay, but I also think that this downside is good opportunity to enter a firm also, but have to see lah. Okay, have to see. Somebody gave me Pagaya also. Somebody gave me Pagaya. I think if you are on the Discord, you definitely will see Pagaya technology lah. Okay, but the report wasn't really complete or that well written. There's a lot of, you can see all my comments here lah. Okay. So if you think Pagaya is good, you can do the work. But I'm actually leaning more on Affirm because they are basically peers lah. Okay, Affirm and Pagaya are peers. Uh, it does seems like on the surface level, Affirm is much better. Not only from the quantitative perspective, but also because I do have a complete report on Affirm lah. So if you can provide something that seems like better catalyst, better outlook on Pagaya with comparison to Affirm, right? Then definitely it's worth taking a look. But it's not something that I'm going to spend additional 3-4 hours to go and do the work on Pagaya just because like um for no reason lah. Okay, since I already have a firm that I can definitely consider. Great earning outlook is not sufficient enough. You definitely need the full sets lah. Okay, the full sets of the data and the report itself. So overall, the fintech space is a bit fragmented. Also, you have to look at what are they actually doing lah. Okay, certain fintech sector serve the consumer discretionary. Certain fintech sector serve banks. Certain fintech sector serve the mortgage. So is very fragmented, and you cannot simply just base on outlook alone lah. Okay, yeah. So that's basically my view. But if you find something, you can definitely let me know now. Okay. All right, guys. Have a good night. Bye bye.